Alrighty, good morning, everyone, and happy Friday. Let's see where we're at, January 24th, 2025. You know what that means. Our upcoming three-day coaching event starts next week. So I wanted to use today's session as a preview of what to anticipate for next week for this three-day coaching event. You're going to see some all new information that you haven't seen before as far as from a coaching aspect, what are the key takeaways that I've taken from my coaching sessions that have helped students the most? I'm incorporating your feedback. I've already gotten a lot of emails from students of what they would like to see in the event. And we're going to be doing this event completely different where you will have the ability to draw on the charts, share your screen, talk on the microphone if you are comfortable doing so, and a lot of new enhancements that I'm making to this class just to make it more informational so you can walk away and apply some of those skill sets. As we come into today's session, just want to again just go over that the three-day coaching event is next week, January 28th, 29th, and 30th from 2 to 4 p.m. Eastern. If you can't attend live, you will get the recordings and content from all 3 days of the event. So I'm going to be answering some questions from students throughout this showcase as well. But do keep in mind, if you have other obligations during that 3-day event, you will get the recordings. So I showed this quiz question last time, but I want to bring it up again and see how you guys do on one of these quizzes. This is just going to be a preview of what to anticipate during the 3-day coaching event, but there's going to be a lot of quizzes to solidify the teachings, and you will have the ability to, again, jump on your microphone if you're comfortable with doing so. But here's one quiz, something that you'll see in the event. Which one is the successful long trade setup? Two different charts of copper. We have choice A. Would we anticipate price would continue to rally after this move down? Or choice B, would we say we'd be looking for a long trade setup after B happens? Now, if you were in here in the last event, you already know, but if not, feel free to take a guess, or if you don't remember, feel free to type in the chat again. Which one is the successful long trade? Would we anticipate choice A to continue moving higher, or choice B? What are we thinking? We've got, let's see, 1, 2, 3, 4 choices for A, 1 for B. All right, let's see what the answer is. If you were here in the last session, might have clicked. All right, the answer was A. The reason being is that choice A actually a little bit different than choice B in that we had a breakout to the upside, a confirmed breakout. So on choice A, when we broke above that prior high, we had a strong breakout. Price coming into some basing to the left will support that move to the upside. Whereas choice B, it's rallying, but we're not really breaking out to the upside. It's really just bouncing off of support down here, but it's got no room to go. So a slight difference between the two. Again, these quizzes are going to get you thinking of, all right, what's the difference between choice A and choice B? And then how can I use this to help me when I'm looking at my charts to anticipate what's going to happen next? So this is going to be all new. If you were here in the last session, a couple new slides, again, just giving you more of that preview of what to anticipate during the upcoming coaching event is very important, and I've seen with many of my coaching students, is having somewhat of a step-by-step process. Now, I understand the importance for that because it simplifies things, it keeps us focused. We have that step-by-step plan of how to approach the charts every day. So I'm going to be incorporating some of these based on your feedback of what you're struggling with. On this one here, I took from a student who sent me an email saying that they were struggling with entry points and how do they get into the trade with greater accuracy and really feeling confident with the entry point. So in starting to build these step-by-step processes, I want to keep them simple. I've got step 1, step 2, step 3 for identifying the entry point. Step 1, identify a daily setup. So we'll talk about these, but in this case, we have a wick over wick reversal on a daily time frame. So we can see the S&P was coming up. We've got a green candle, another green candle. When we have two green candles moving up, we look for the wick over wick reversal, which is when price breaks below the low of the second green candle. So step one, we want to make sure that we have a daily setup so that we know which direction we're trading in. Are we looking to go long or are we looking to go short? In this case, that daily setup would tell us we're looking to go short. We come over to step two. This is where I'm bringing in more of that detail that many of you haven't seen before, but step two, we'll drop down the time frame from the daily to the 4-hour to identify our zone and the breakout. So there's two pieces of a trade that we want to understand how that determines where we're getting into a trade and determines our entry point. One is either taking a zone trade, two is taking a breakout. When we come down from a daily to a 4-hour, that gives us more information of what the zone looks like and where the breakout trade will be. That also tells us if we want to take a zone entry, does it fit within our risk parameters? And how do we qualify a zone? In this case, we'll use the same characteristics that we look for on the daily chart. On the 4-hour, we have another wick over wick reversal right here at the top of this move. There's going to be a lot of similarities between the daily analysis as well as the smaller time frame analysis. But step one, daily setup. Step two, using similar concepts and odds enhancers to find the setup here. Wick over wick reversal. And then for a breakout trade, we look for our support area where we would look to take the breakdown. And then from there, we decide our entry. If we want to take a zone entry, we'll wait for price to come back up to that wick over wick reversal, which over here you can see it popped into it. That could have been one trade entry. The alternative trade entry, which I have in this screenshot here, is going short on that breakout below the green box. Again, what I'm doing is I'm simplifying it based on your feedback. If you're telling me, hey, I'm looking for help on entry points, how can we break that down into a simplified step-by-step process? It all boils down to a daily setup, identifying the zone and the breakout, and then determining our entry from there. As we go through the 3-day event next week, we'll be incorporating odds enhancers as well to determine what makes this a higher probability short trade, which is going to be, do we have a fake out breakout? Do we have a 2-candle flip? Do we have a wick area? And then we'll start to really boost up our trades based on how many odds enhancers we have. But to keep it simple, daily setup, zone and breakout, and then you go down to your entry point. Now, just out of curiosity for everyone who's in the room, how many of you guys like the smaller time frames? So I want to kind of get more of a feel. I've gotten many emails, as I mentioned, for the upcoming event, but I want to get a feel as we get closer to it, what you guys are looking for. Do you like the smaller time frames more, or do you like the higher time frames? Let's see, I got a couple for the smaller time frames. Hey, Callie, good to see you. Use both. Smaller, that's what I'm seeing. I've seen that in the emails too. A lot of people like the smaller time frames. Smaller. So as low as the 1 minute, I mean, we could do tick charts. That's a possibility if you requested it. I haven't gotten any requests for tick charts yet. But again, you can include those in email. I'm seeing a lot of smaller, so I will include those in the event. And it'll be the same step-by-step walkthrough as far as setup, zone breakout entry. I'm just going to need to tweak things based on the smaller time frames. But this is great feedback for the upcoming event. So you'll see that more of the lower time frames. Learn to like the larger, okay with any? All right. So I'll include both. I see a couple people say both, some kind of intermediate hourly. Let me write that down too. See hourly, 4-hour, 1 hour. I'll do a mix. And And then again, when one of these sections maybe clicks with you, that's when I'll give you the microphone if you want to jump on or share your screen. Again, you'll see some cool tools that I'm including during this event. But great to know, a lot of lower time frames, so this helps me to really hone in on these moving forward. Perfect. All right, here's another kind of breakdown of someone came to me and said, all right, what do I look for in order to stay in a trade? So you've gotten into the trade, you found your entry point. Now what do you need to do to stay in that trade? So step one, make sure you have that daily setup. Step two, what's very important is looking for a confirmed breakout. Now, this is a small nuance that some students get tripped up on, is that they think a breakout has happened, but in reality, it hasn't broken through resistance. So we need to qualify, what does a breakout look like, and how do we know that it's a confirmed breakout? What I mean by confirmed is, did we break through supply? Did we really take out an area of sellers? In some cases, it'll look like we broke through resistance, but in reality, we didn't when we take a step back. So you want your setup, you want your confirmed breakout, and then we want to be able to bring our stops up to the nearest pivot points. So as we get into the trade, getting in on that wick over wick reversal, but then as it's moving in our direction, we want to be able to trail our stop up based on those nearest pivot points. So trail the stop up, trail the stop up. That's what's going to allow you to stay in the trades longer, manage the trade, stay in the trade. Now, this picture is on the daily time frame. It'll look slightly different on the lower time frames, and I'll show you what those nuances are. But smaller time frames start looking a little bit different as far as the pivot points. So we want to be able to go into what to look for to stay in a trade on the larger time frames, but also on the smaller time frames. Hey, Robert, let's see. Confusing. Let's see. In the daily, there is red, green. You've often said we're now looking to go long. Yes, i.e. the trade direction is long. All of a sudden, on the second green candle, you declare a short trade. Is it because of the tall wick on the second green candle? See, I think you're talking about, okay, let me see. This one here? Okay, so yeah, let's go back to this one. So down here, which I think you're seeing, we've got the red and green candle, two candle flip on a daily time frame that did give us a trade to go long. So you are correct that on this day, if we're looking at our charts, we would have been going long at around 6,000 on that breakout. And then notice that price rallied all the way up to around 6,075. So in that case, we took the trade to go long. That happened the day before that. We would have gotten in on this day already. So now we want to reset, look at the markets again and say, all right, market conditions are slightly different. After price rallied to the upside, what did we hit over on the left over here? A little bit further to the left. You can see two candle flip. It works. It rallied. It had a 75-point move on the S&P is pretty big for a daily move. Yeah, hit that supply right over here. That supply can be seen with that two candle flip. So yes, when we do see that long wick on the top side, that's always going to be an odds enhancer. Because that tells you, hey, the sellers are over here. They're still in control. Good job, Jimmy. Supplies over there, selling pressure. So it doesn't mean we can't look for a long trade. It's just telling us that the signs are pointing towards, you know what, some selling is coming in. If more selling comes in, where will my entry point be to get in on a reversal? And that's when we look for the break below the wick over wick reversal. So that's on the daily chart, and you can see how it ended up reversing, having this big move to the downside when we came down to the 4-hour. And it's because, yes, that long wick on the top side, hitting an opposing zone. This is where I'll start to quiz you guys, and I'll say, here's your setup. Is the next candle red or green? Are you looking to go long or short? and then why, and what would be those market conditions that would say, I would only go short because we're hitting an opposing zone. We have a tall wick on that green candle, like you mentioned. However, I wouldn't want to go short the next candle, maybe right away. You could, and again, you found that entry point, which gave us a good entry. Maybe you wanted to wait for the break below the wick over wick reversal. Completely up to you. Two different trading strategies. The one on the left is going to be more for swing trading. If you want to just look at the daily time frame and up, you'll focus more on these setups. Your entry would be below the low wick of the green candle. If you're more into the smaller time frames, which a lot of people are, we'll do some of this other analysis that says, here's my zone, here's my breakout, here's how I can get into a trade sooner based on the fact that we're seeing the sellers start to push price down. That makes sense, Robert? And yeah, great question, because you see the two candle flip, the breakout. Now, why are we looking to go short? Bring in those odds enhancers like the tall wick, the two candle flip. They're just little signals and kind of red flags that say, hold up a second. I think we may be starting to push lower. So where are my entries going to be? And then seeing these signs on the smaller time frames is what can help us to get in sooner to a trade. Another common question is, all right, I've gotten into the trade. I know how to manage it. Now, where is my entry or my exit point? How do I get out of a trade? So let's say you got in on a two candle flip down here. You can see we've got red and green candle, two candle flip. That says look to go long. Now, what do I do as far as my exit point? Where do I set my target? Where do I get out of a trade? Step one, identify prior support. So we come up and to the left, we see where the support is. Why this is important is because this is where the buyers previously were holding price up and then it got taken out. So what that means is right above it, there's going to be likely a large stack of sellers that are waiting to get their orders filled. So step one, we identify support. Step two, put a big circle on the basing candles that are right above the support level. And that's going to be our pivot point. If you've been in my classes for a while, what do we call that pivot point specifically? It's got a name. I just didn't want to confuse us too much. But what do we call that basing area that happens before a breakout? So we've got support, support, breakdown. So that means the sellers are really concentrated up above that support. What do we call that pivot point, that last bounce before the breakdown? You could do that, Jimmy. Drop, base, drop. If that's something that you see, price dropped, we're basing, and then we drop. Just make sure if you're using that, again, support is going to be a big odds enhancer here. We don't want to just find random drop, base drops. They need to be in a very specific location. But yeah, we call that the awesome job, Callie, Joy, Dwayne. That's our controlling breakout pivot. Absolutely. Why do we call it a controlling breakout pivot? Nice job, Michael. Is because it's controlling this breakout to the downside. Price only broke lower through that support because of this basing that happened. So that's why we call it the controlling breakout pivot, is because this area is in control. We use that for our exit points. When price returns to the controlling breakout pivot, that's where we exit the trade. Price dropped from there, and then we took profit. So this can help give you the visual of where we get into the trade and also where we get out of a trade. So if we got into a trade down here, and this is a little bit smaller time frame, gold on the 1 hour, we got into this trade at 26.80 using that two candle flip. Let's see. So we got into the trade at 26.80 with that two candle flip. We exited the trade at 27.15. That's where our controlling breakout pivot was. You do 27.15 minus 26.80. That's a 35-point move. Who can tell me what the point value on gold is? 1 point on gold is if we got a 35-point move from entry to exit, you'd take 35 points times, thank you, Dan, $100 per point, and that's a $3,500 move. Again, keeping it simple, step by step. And the more feedback I get from you guys, the more I'll be able to create these slides. And then you'll be able to use the whiteboard to draw out and kind of test your knowledge with these. But I just wanted to include some of these step-by-step processes based on the feedback I've gotten so far. Yes, Tom, absolutely. So that'll be in the event. Yep. So I know a lot of you guys are signed up already. But yeah, the controlling breakout pivot, we'll go into more detail on that. And let me write that down just to make sure I touch on that in detail. So for the definition of the controlling breakout pivot, one way to think of it is the basing that happens before a breakout. So when you put a circle around the basing before a breakout, that tells us that that's where the supply or the sellers are. But yeah, there will be a more formal definition and different variations of what the controlling breakout pivot looks like, because on a daily chart, it's going to look completely different than a hourly chart. So in this case, on the 4 hour, for example, our controlling breakout pivot would be this last bounce here. On a 1 hour, I would use more basing to show where that breakout is. Yeah, we'll include more details and more screenshots to help you put those pieces together. Hey, Robert, let's see. On the daily, first example, yes, this one. It's a wick over wick reversal, but it was a wick over wick continuation. Yes, so if we, I'm not sure if I'm going to be able to zoom in like this, but if we forget that this candle was here, so if I blocked out that candle, the setup would be the two candle flip. From there, we look for the two candle flip breakout, which would be going long above the high wick of the second green candle. So then that gives us the trade there. You could look for another wick over wick continuation going long above this high wick. So yes, you are getting those continuation moves. You got the breakout here, price broke above, it continued to the upside. It's just at this point, based on the fact that there's an opposing zone and this long wick, we want to start looking for a potential reversal. Now, it may not happen, and it could be another continuation move in which you would go long above that high wick. But because of some of those other odds enhancers, it's giving us an indication that we may want to anticipate a reversal. So yeah, the previous move was that continuation. It's just we're saying this is what we're guessing may happen moving forward. So it hasn't happened yet, you're right. It did continue, but we're saying that a reversal may happen moving forward, and ultimately that's what takes price down. Yeah, great questions. And keep those coming, because if things don't quite make sense, that's where during the event you'll be able to talk on the microphone, draw on the charts, kind of engage with me a bit more to really make sure that we're all on the same page. Top 3 odds enhancers, you learned about these in the last one. Fake out breakout. How do we get in at the reversal move, at the origin of a reversal? Controlling breakout pivot. We talked about that one. Key area for identifying our entry point and exit point. And then adjusting time frames. So high time frames typically tell us trade direction, and then we'll go to those lower time frames for entry point. I wanted to show, so this setup on the entry point, daily setup, zone, breakout entry. We actually did this one during our class on Wednesday, I believe. Did anyone take the crude oil trade from the live trading room on Wednesday? By chance? We set up a trade on crude oil to go short, following that step-by-step process. And currently we're up 1980 on two contracts from that trade that we took. If you did take it, let me know. What we were looking at, again, is following that step-by-step process. So on this day, price was coming down. The trend was down. We were looking for more of a continuation move. So what we said was if I'm going to look to go short, my breakout trade will be here to go short. But I also want to incorporate step 2, which is identifying our zone. So step 1, identify the daily setup. Oops. So over here, the daily setup would be a wick over wick continuation to the downside because we're trending down. Notice this long wick on the top side showing selling pressure. So daily setup, wick over wick continuation to go short. Step 2, identify confirmed, or sorry, that's this one here. Identify the zone in the breakout. From there, put a circle around that. Come down to your lower time frame, the 4-hour, for example. So at this point, we had two options. One was taking the breakout trade below this support. Now, if you recall from class, I didn't want to take that breakout trade here because of this 2-candle flip to the left. There was too much support coming in to want to go short down here. I wanted to wait for price to return to my zone entry. So notice the zone here. We have a wick over wick reversal, 2 green candles, and then price came down. On crude oil, what setup did we have for our zone entry? If I cover up the right-hand side, and this is what we're looking at on that day. What was our zone entry to go short on crude oil? Where would I mark my zone? Good amount of candles in here, but what do we have for our zone? Is it a wick over wick reversal? Is it a 2-candle flip? Is it a wiki area? Nice job, Randy. We've got our 2-candle flip right there. So you use that on the high time frames, but for your smaller time frames, which a lot of people here do, you're going to be finding the same information. Price just barely tapped that zone. You can see came into it about 1 or 2 ticks and then shot down from there. So our trade on that, again, went against us maybe $20 and then came back out from there. So we're up 2,100 on that crude oil trade from Wednesday, incorporating the step-by-step process that you'll learn about next week. Again, I'm really excited to put all these pieces together and to have you all see these steps come into play and how it can simplify your trading. If you're getting a little confused now of whether you should go long or whether you should go short, this will help simplify. Robert has a great question too. So why short? Immediately to the left is a demand zone. So if we're looking here as far as maybe a rally-based rally, prices coming down into demand, you do have a point there. But again, at this point, if we come back, we still have some room to run till price gets down to that daily demand. So we want to gauge profit potential and price basing here. When we see this basing, a lot of times it's forming a new zone. So what we'll talk about is if price is coming down to an opposing zone, this is where a lot of traders can get tripped up is, should I be looking for the long trade at this point because we're coming into opposing zone, or should I stay with the trend? Typically, we do want to stay with the trend until we get a signal of somewhat of a reversal. Now we're seeing a 2-candle flip start to form. So at this point, we would say look to go long. The issue with seeing this and saying I want to look to go long is that the indication still says we're selling. So until you get a bullish two candle flip or wick over wick reversal, we want to stay with the current trend. I tell a lot of traders, focus mostly on the most current 3 to 5 candles. A lot of us look back too far and it takes away from what price is doing real time. Real time is these candles. This is kind of more older information. It's important. But as far as what's happening real time, we're building up new sell orders. We would want to take that to the downside, at least for that day and for the next day. So again, that step-by-step process, we identified the setup. And you could have a setup to take the wick over wick reversal long. It's just notice that that one didn't trigger. But kind of be prepared for both sides. In this one, the continuation move, when it was underway, identified the zone and the breakout. We got it in our entry point, and that's why we're up $1,700 at this point. All right. Yeah, great question, Robert. Let's see. So we've gone over the odds enhancers. Again, step by step, it's going to be interactive like this as far as going through charts. I'll say step 1, where is the supply zone? This is a strong zone because it's a controlling breakout pivot. Step 2, this is where you would look to sell because a fake out breakout happened. And then we go through the steps. Again, step 3, identify the breakout. Step 4, here's your entry. The more I can work with you guys and put these pieces together, the more it's going to stick and you're going to be able to use this information in your own trading. So again, some of the feedback that I've gotten so far is doing a top-down analysis, how to trade on the low time frames starting from the high time frames. Touched on that a little bit as far as the breakdown, how we go from the daily to the smaller time frames. Where to take profits and place your stop loss on the low time frames. So again, I'll be including more of the lower time frames. Side-by-side comparisons of breakout trades. So which sometimes breakout trades work, sometimes they don't. We need to be able to see which ones are likely to work out versus which ones are more likely to fail based on the location. And then a feedback for homework is looking for a 2 candle flip, fake out, breakout in the right location, and which ones appear to be in the wrong locations. So really comparing, again, here's a setup. We're looking at a 2 candle flip, fake out, breakout. Sometimes it works, sometimes it doesn't. Which ones work? What does that picture look like? And the ones that fail, we need to have in our minds a very clear picture of which ones fail so that we know to not take those trades as well. Let's see. Why didn't you exit at previous demand? Why wait for the current green candle? It's just because we don't want to, some of us try to jump the gun and try to get into a trade too soon without seeing that confirmation. So with my strategies, I'm really big on getting some sort of confirmation of a move. And if prices tell me the sellers are taking price lower, I'm going to stay with that because that's my confirmation that we're moving to the downside. Now, if you went short up here at this 2 candle flip, you could have taken it down and maybe grabbed some profits and exited the trade there. This is just where we were finding a trade to take for that day, more of a short setup. And then yes, of course, you can see it's moving back against us from that basing. You could look to exit the trade at this point. Just wanted to take advantage of that breakdown. So another odds enhancer is price getting ready for a breakout, which it did. And then that may be also where you want to exit the trade. All right, and then I'm going to go into this one shortly, but I want to jump out to the charts for a moment. What are you guys looking at for today's session? What charts are you looking at? Are we looking at the equity indexes? Are we looking at gold, copper, platinum? Where are we at for today? I'll start with yours, Mark. Let's do copper. Let's see, daily time frame. And then I'm going to zoom in. Let's start incorporating maybe some of our steps. All right, coming over to the right-hand side, we can see we've got a two candle flip. That two candle flip worked out to the upside. Now, what do we have on the other side? We've got a two candle flip. Price broke out. What did we hit on the other side? What did we hit on the other side? There we go. Yeah, we've got that wick over wick reversal right at the top. So for exit points, that would have been where we would look to exit that trade if we went long on the two candle flip. Absolutely. Resistance, you bet. So price is tapping that wick over wick reversal. It's coming back down. Now it's coming back down into our two candle flip. Is this a place we want to necessarily look to go long, or would it be a place we want to look to go short? Well, at this point, the sellers are still in control, kind of like the previous example we looked at, where price is rallying. It broke out to the upside, but it didn't really clear above that wick over wick reversal. So it stopped in it, and now it's pulling back. So I'm seeing that as some resistance. I may want to start looking for a short trade. Do we have a setup at this point? Not quite. I would say if we close today, we might have a two candle flip to go short or a wick over wick reversal. But let's drop down the time frame and come down to the 4-hour. All right, 4-hour time frame. And I'm still seeing some bearishness because this resistance is holding. This is going to be one of the odds enhancers that you'll learn about during the event is, do we have support or resistance, and is it still in control? Notice how price is unable to break through that resistance. It hit it, hit it, hit it, and it's failing from there. So price is moving down. We're not breaking above resistance. And as Dwayne mentioned, we've got a two candle flip right at the origin of that move down. So our short trade could have been at that two candle flip right here. As an alternative, if we're looking for maybe a place to re-enter the trade, we could look to go short at that two candle flip inside that resistance area. Let's take it down a notch and come down to a 2-hour. Yep, two candle flip, wiki area. Combining those odds enhancers is huge. Absolutely. 2-hour time frame. 2-hour gives us more detail of what's been happening as price rallied in that wick area. We're basing. You can see that two candle flip here as well. You want to make the zone smaller. I would bring my entry down to the low of the red candle. That's our two candle flip. So now as price returns back to that area, I would look for a short entry around 4.369. Stop at 4.389. Another odds enhancer that I like is that, see this long wick on the top side of the next red candle? For me, that tells me that price tried to rally, hit that zone, and then failed, and then took us for that next push to the downside. So a lot of selling in this area. It would be an area that I'd want to look for a potential pullback from. For you smaller time frame traders, if we come down to the 15-minute, we can get some more detail. See, and I'm just going to zoom out, bigger picture. We can see again all that resistance that's still holding here. So as price rallies back up to this area, again, we don't have a lot of room to run to the upside. This is where I'd be looking for my zone entries. If you want to make your zones smaller, then I would say to find your zones, look for those two candle flips wick over wick reversals. We've got a wick over wick reversal here. Two green candles coming up and then price broke below it. That would be an area for a zone. And then we've also got a couple 2 candle flips up here. But I'm going to set up this trade. I like this pivot point because we had a very strong push down from it. Price took out support. Broke down. So now as price returns back to that zone, that would be where we look for our short trade. Similar to the one that we talked about in our example here. Let's see. This one here, we're looking for our entry. We identified where our zone was and the breakout. Now the breakout has already happened. So now we're just identifying the zone that was formed prior to the breakout. So if I'm going to set up this trade, my entry is going to be to go short at 4.3688, or sorry, 4.3690. So sell limit 4.3690. That's a sell limit order. And then in this case, using that zone, I would place my stop at 4.3800. Now I might order in place. I'm using both time frames, high time frame to tell us what direction we're looking to trade in, and then the lower time frames to find our entry point. It can be as simple as that, as simple as our 1, 2, 3 process. The daily setup, again, once we find our entry, I like to go back out to the larger time frame just to see where we're at, where my entry is, and kind of conclude why we're looking to go short there. So if we're looking at this kind of bigger picture perspective, yes, we were rallying for several days, but as of recently, we've started breaking down and price has been moving lower. So it all started with that wick over wick reversal that you guys mentioned, Mark, Dwayne, Tom, Jimmy. We got that wick over wick reversal, which signaled, hey, I want to start looking to go short. Price is breaking down, breaking down, breaking down. Now we're getting a pop back up, but we don't have a lot of room to run to the upside because the sellers have been in control for the past 1, 2, 3, 4 days. So price is rallying up. We're looking for our short trades. Some other odds enhancers. Price rallying inside a controlling breakout pivot. Notice this is where price based broke down. This part of the step-by-step process was, let's see, that was this one. So identify support, identify the pivot, that's our controlling breakout pivot, and then that would tell you where to exit a trade. You can also use it for entry as well. So here's my support, here's my pivot, and notice to the right-hand side that this is where price has been stopping for many times and many months as price has been getting rejected here over and over again. So I'm not too convinced that the buyers are in control at this point. The sellers are aggressively pushing price down. We are bouncing a little bit. However, I don't think we're out of the woods quite yet as far as copper is concerned. I think this could just be a push before the next wave lower. Okay, so now swing traders versus day traders. If you're a swing trader, you like the higher time frames. I know Robert likes the higher time frames and kind of more of those. How do we look at the bigger picture so that we can stay in those trades longer term? This would be one where I might wait for this candle to close and then take a 2 candle flip, wick over wick reversal to go short because the sellers are still in control. If you're more into the day trading. So everyone in the chat that mentioned the lower time frames, the hourly, the 4 hour, then that's where you still do this analysis on the daily, but then you'll come down to the smaller time frames and work on those odds enhancers. So the hourly, confirming that we're in a wiki area. We haven't had a breakout to the upside. We're in control lower. So now instead of looking for long trades, I want to look for my shorts, find your breakouts and your zone entries. Let's see, yeah, let's come over to S&P. So we're done on copper, and that's really all you have to do. I mean, once you've done your analysis, if you like the trade, you can set it up. If maybe you don't have a setup, jump out to some of the other charts. Let's see, we'll do S&P next. Just looking at the requests in the chat. Okay, let's go to S&P. So copper, we're done. S&P. Oof. What a rally, huh? Oh, this is a good one. So we're rallying, rallying, rallying right at all-time highs. Let's see what that previous high was. 61.6375. This one was 61.6225. Could be a good one. So with price at resistance, I would want to anticipate that we could see a pullback. However, the trend is very much to the upside. On this one, since there's a lot of candles and it's kind of hard to see, I would go up in time frame. Let's take a look at a real bigger picture right now and just see the monthly. Monthly's telling us we're very much in an uptrend. This was a correction, and now we're getting ready for that breakout to the upside. So higher time frames can give you that perspective of, all right, what's the trend? Trend is very much to the upside. I wouldn't be looking to sell at this point. What's that expression when people are trying to sell up here, and they're trying to pick the tops, and then the markets blast through those resistance levels? What do we call that process? What's happening? Yeah, Dan knows it. That's the short squeeze that we look for, is how many people are trying to short here. They're saying, I'm going to pick the top, I'm going to be right or try to be right, and then the market squeezes them out and price rallies through that. It happens a lot when we're in these uptrends. If you notice those previous highs, price tends to break through them, pulls back a little bit, and then continues. Another resistance level, we broke through it, pulled back a little bit, continued. So I'm looking for price to break through that resistance. And what do we have on the weekly chart that's saying, look to stay in this uptrend? What do we have on the weekly chart? We have a big what is signaling the trend to continue to the upside? Nice job, Diane. Yeah. Red candle, green candle. That's a very large 2-candle flip we have. That is signaling that push to the upside. Nice job, Rusa. Dwayne. All right, so my bias is to go long. We want a good entry point. We're pushing into this resistance. I would say it's probably minor resistance based on this huge trend. What we can do now is start to go down to the smaller time frames. Let's take it down to the 1 hour and find our zones and our breakouts. All right, so we pop through that. We're pulling back. One of the odds enhancers for those of us who do the smaller time frames is if you have these pivot points, a lot of times that's where price will return to prior to the next breakout to the upside. I just want to go up actually to a 4 hour. All right, 4 hour time frame. We've got two things. We actually have a wick over wick reversal right here. Two red candles coming down, and then we had that breakout to the upside. And we've got a two candle flip down here. So this is signaling the trend to continue. If I'm looking for a zone entry, you can use that wick over wick reversal, the two candle flip. If you want to reduce the size of your zone, we would go down in time frame to do so. Yes, so I would say one tick above the high, maybe not the all-time high. Let me see. Yeah, we are right there. I would say above this current high. You could use that all-time high. This high that we're hitting right now, what I like about going long above that high is that it had that breakout, very small breakout, but it did. And now we're pulling back down into where our zone is. So to get that confirmation entry, you would go long above the high of that green candle. I'm running out of time. Let me try one or two more. Let's see, I see corn and NASDAQ. Let's do those. Corn. I like it. Let's see what's going on, Patrick. A lot of basing. Trend is very much to the upside. Just looking back to see where we're at. We've really started breaking through a lot of resistance levels. Even though we're in this basing area over here, the trend is very much to the upside. We do have a two candle flip that's formed. That would tell me to go long above the high wick of this green candle. Otherwise, I'd want to wait for a pullback, maybe down to the spacing area, and look for a new two candle flip to form. I don't want to go short because we're going against the trend. In that case, if we would look to go short, it would take us below, right into this zone or this zone. That would be a counter trend trade. So I would wait for price to break above that green candle high. Yeah, corn's a good one, looking for those pullbacks to help splice in. Notice when we pull back and we get those two candle flips, that's what takes us to the upside. And then let's see where we're at on NASDAQ. A little bit different than the S&P. Similar picture though, it looks like we're getting ready for the next breakout. All of this basing is occurring below this previous two candle flip. When the trend is up and you see this basing with these long wicks on the bottom side, it looks like we're getting ready for the next breakout to the upside. So then my entry would be going long on a breakout above those high wicks. Or if we want to find a zone entry in that wicky area, we'll come down in time frame. And just starting with the 4 hour right now, we've got a two candle flip down here around 21,922. Or you can look to take the next breakout. It looks like this basing is what's going to create a breakout and possibly give us that short squeeze. Yeah, I like how you word things, Jimmy. Break of structure. Yeah, because it takes some time. Sometimes it takes a couple days for those breakouts to occur. So if you have a two candle flip, for example, structure or price pattern, it may take 1, 2, or 3 days to break through that. But seeing what's going on ahead of time can tell us, all right, we're pushing higher. It's taking a couple days, but ultimately the trend is up. I want to look to go long. As we start to wrap up our session, I want to show you guys a video real quick. So for the drawing tools, I'm going to be taking you guys into the next Zoom session. So it's for those of you who have registered for the 3-day coaching event, come into the 30-minute coaching lab and I'll show you how to use these drawing tools. I'm going to show you on the screen for a moment. I was going through this with a student where we were using the interactive whiteboard in a coaching session. I just want to give you a preview of what that's going to look like. So you'll have the ability to draw on the screen. You can see the green lines are showing where the student is marking up the charts. I'll speed it up a bit just to show you, but you'll be able to have my screen there, walk me through your thought process of where are you looking for your trades, where's your zone entry, where's your breakout, and then give me feedback of what you're looking at. And then I can help tweak your trades real time so that when you're going back to your charts, you know exactly what to look for. It's a cool new enhancement I haven't done in any of the events up till now. So if you want to learn how to use those, I'm going to include the link in the chat. You don't have to have registered for the event just yet to join. If you're going to be signing up over the next couple days, come to the lab now and learn how to use those drawing tools so that you're prepared. If you do want to draw on the screen, you have the ability to do so. I'll be sending out an email momentarily, but I'll also post the link in the chat. So if you're in the chat right now, where you're posting your comments, I would say click on that link. That will take you into the next Zoom session, and I'll be able to share with you guys how to go through this process of drawing on your charts, drawing the lines, marking where your controlling breakout pivots are, and ultimately putting the pieces together that you learn throughout the 3-day event. I'm really looking forward to this. If you haven't registered for the upcoming 3-day coaching event, if you do need to run, I'm going to include the link to register for that. Again, it's going to be next week. A lot of you have already signed up. If you've signed up, send me your feedback. What would you like to see during the upcoming 3-day coaching event? You can see a lot of what I've done is included your feedback in these step-by-step processes. So if you need help on what to look for to stay in a trade, if you need help on entry points, whatever it may be, send me an email so that I can include it during the upcoming 3-day event. The link to register is in the chat, and I'm going to end this session now. I'll be sending out an email momentarily. You should be getting that email now. If you wouldn't mind, if you're still in the room, could you type in the chat if you received that email? It's going to say Kait Trades Interactive Whiteboard Zoom link. Okay, great. So you guys are getting it. So to get the recording of today's session, I will be sending a follow-up email after. Once both of these sessions are completed, you will get the recording as well as the link to register for the upcoming 3-day event. Awesome. Thank you guys. Thanks, Patrick, Callie, Diane, everyone. Dan, jump into that Zoom link now. We'll get started with the interactive coaching lab to prepare you for our event next week. Any questions, send me an email. Appreciate you guys being here, and I'll see you over there in the next session. If you haven't gotten the link, let me post it in the chat one more time. Yes, if you didn't get it, Dwayne mentioned you didn't get it. I'll post it here just in case. So just click the link in the chat, and that'll take you into the event. All right, I'll see you guys over there shortly. Bye-bye.